Hi there, this is Bill with Smart Trades, and it's about, 12:40 Pacific time, and the date is July 30th, Friday. Hope you're having a good week and a better weekend ahead. Just a quick look here at the short-term pattern on the S&P. We're also going to look at the NASDAQ and the Russell 2000, as well as Google. At any rate, I had previously mentioned the 1108 area, give or take, as a support area for the market, and I said if it broke through there, that we likely would have more downside, and that's worked out so far. We're bouncing a bit off of today's lows, but this is a very interesting scenario that's developed in that I believe we may actually have an impulse to the downside, and maybe a bit of a disguised impulse for the folks counting the 15-minute charts, in that you really have to look at the hourly close-only data to see this impulse. Anyway, I may be wrong, we'll see, but we have a nice target, a well-defined target for this the rally back up, and also a low-risk place to eliminate this particular count. That would be the elimination of the count would be new highs above the highs earlier this week for all the stock indices. And at any rate, first things first, the 1108 area, which as I said, I had mentioned that as support, it is now resistance. It's both the previous fourth wave of one lesser degree terminus, as well as a 62% retracement of this decline. Again, you don't really see the impulse when you look here at the hourly without the closes, but if you switch to a close-only chart, you can see we have both 5 waves within one, a wave 2 up, 3 down, 4 not overlapping on 1, and then a 5th wave down. And then from there we're bouncing back a bit. Here we are on the NASDAQ. On that count, we've got resistance coming in around 1877. It could go up to perhaps 1888. Again, new highs above the highs from earlier this week eliminates the pattern and proves this bearish count, at least on the short term, wrong. But for now, let's look for that 1178 area more or less on the NASDAQ. Again, 1108 on the S&P cash. And here's Google. Google's interesting for a variety of reasons. It tends to lead the way. So the fact that it has already perhaps bottomed in wave 1 and is apparently rallying in what I'm calling an ABC of wave 2 is worth noting. Additionally, if you look at the pattern to the downside, very clearly on Google you can see the 5-wave pattern down. 1, 2, extended 3rd, wave 4 back up, and then a 5th wave down. We're calling that 1. We've got an A back up right to that previous 4th wave terminus, B back down, and we're trying to work on getting back up to the top of that previous 4th wave terminus again. It's around 488. It could go a little higher, may not get there, but 488 would be the ideal target for CO2 to complete. And again, I would expect Google perhaps to be one step ahead of the broader market, but that remains to be seen. And finally, let's take a look at the Russell 2000 60-minute continuous chart. This includes overnight data. Very nice 5-wave pattern down there as well. You can count 1 down, 2 back up. You can see a nice subdivision of 5 waves down within 3, 4 back up, and then wave 5 down. A up, an ABC wave B, and we should be getting an impulse back up, an impulse style C wave that will terminate ideally around 656. Once again, new highs for the move above the highs earlier this week eliminates the count. A move much beyond our targets, the 656 on the Russell, the S&P area around 1108, and so on, throws the count into question, but the new highs for the entire move are what really breaks it. So anyway, that's about it for now. Hope you're having a great week and a good weekend ahead. Thanks for watching. Bye-bye.